respond? Should we complete last week question, or we move to another one if you have looked at it thoroughly? Because we have so many to do this minute. Hmm? Nobody is saying anything, no opinion.
So you can complete it. You can complete.
Huh?
You can
To complete
complete.
it.
Yes, sir.
Okay.
Yes. Sir.
Okay, let's go to the question back. I think the question is on Aya. Okay. The answers for the statement of profit or loss and the statement of financial position. That's what the question asks us to do. So we should prepare a statement of profit or loss. So a statement of financial position. Aya. So consolidated statement of profit or loss for the year ended 30th December 2017, 30th appear, which is in thousands. So revenue, cost of sales, gross profit. The gross profit, we have distribution, cost, admin, expenses, then finance cost, profit before tax, profit before tax, and tax, profit for the year. I'll go to statement of financial position. Open statement of financial position. It's okay. Consolidated statement of financial position. Position. Assets. As at 30th September, just 2017. Good. Well, more current assets. We have PPE, 1299 200 plus 403 200. Then I'll write my goodwill. After the goodwill, I leave two line space. I go to the current assets. In my current asset, what do we have? Okay, we only have current assets, which is 512,000 for the parent, then subsidiary is 211,200. Then this is my total assets, equities, and liabilities. What are my equities? We have share capital. Share capital. Retain earning. Then before that, leave NCI, then we have non-current liability. Non-current liability, which is 10% loan notes. So I don't have 10% loan notes. He has 96,000 plus 128. Then followed by the current liability, 262,400 plus 150,400. This is my total equities and liabilities. So to balance this in exam, let's create a working, sub-working. What do I need to balance this? Definitely, I need the group structure. Don't forget, group structure can be tested in how many ways? I need the group structure adjusted, retain earnings of subsidiary. As per SOFP. Then I need to determine the net assets. It's okay. Determination of net assets. Net assets. Net assets of subsidiary. We say item of subsidiary. Items. DOL, DOC, and POS. You need to calculate the goodwill. I need to calculate the goodwill. I'll write the formula out. Cost of investment, add NCI, purchase consideration, or less the net assets at the date of acquisition, then goodwill. Then retain any of the parents. So any of parents. As per SOFP. Then I need NCI calculation. NCI, date of acquisition. Then for the POL, the major calculation we used to do in POL, the major calculation is the cost of sales. open a cost of sales account. That's all. This is what I will do in exam. With this, I will not be reading the question and be posting. I'll be reading the question and be posting. If you go to the question, they say on 1st of April 2017, date of acquisition. So April, what happened on that day? Let's see. 1st of April 2017. Date of acquisition, 1st of April 2017. Acquire 60% of equity share capital of Lower. He has given me the group structure proposed. Parent is 60%. ICR 40%. That's all. Although in a share exchange of 2 shares in higher or 3 shares in lower, don't forget, we have established anytime there's a share consideration, what are the things to know, which we have stated it last week. It must be issued at the market price per share of the parent. That is certain. 2, in case the market price per share of the parent cannot be determined, that of the subsidiary should use. He said 3, in case there is no share premium, the share premium account must be created. That's number 3. Then the 4th one, accounting entry to post. There's a share consideration, provided it has not been posted. Said cost of investment will be debited, equity shares must be credited, and the share premium must also be credited. That is what. So I'll go to the question. Numbers of shares in subsidiary, because the values of shares all over nominal value. What is the values of share? 128,000. The nominal value of 1 naira. In case they don't give us the nominal value, we assume it's 1 naira. Naira cancel naira. 1 goes in 128 to give us 128. This is at 100%. Parents only acquire 60%. When I say parents acquired shares. How will I get that? He has told me you acquire 60%. Then 60% of 128. 0.6 times 128,000. 0.6 times 128.
76,800.
What do you say?
76,800.
76,800. He has given me a share consideration. And it is exchange ratio, which must be parent over subsidiary. Now, the cost of investment was okay. 2/3 times 76,800. 2/3 times
51,200.
51.
200.
Cost of investment will be debited. 51,200 times what is the market price per shares of the parent?
6 naira.
51,200 times 6 naira.
307,200.
307,200 will go to equity shares to be credited. 51,200 times the nominal value of equity share to give me 51,200. Has it created a premium? Yes. Who has the premium? Parents. Premium to be credited. We say 6 naira minus 1 naira times 51,200. Don't forget it is 2 credit against 1 debit. What else?
256,000.
256,000, thank you. We ask the question, has it been recorded? We ask the question, this cost of investment of accounting entry that related to equity share consideration, has it been recorded?
No.
If it has not been recorded, I will record it. How do I record? Say cost of investment debit for my goodwill calculation. Okay. Calculation. Cost of investment 307,000. Equity shares now will now be credited. I'll go to the share capital of the parent. What was reporting the share capital of the parent in the question? I'll pick from there. Say share capital. What was reported 320? Plus 51,200. He has created a premium, a share premium. I'll create a share premium account. 256. That's all. I'll just create a share 56. That's all for me. Any question for me? Any question for me? Any question? In the absence of no question, in the absence of no question, will you say again? Or go to additional information one. At the date of acquisition, the fair value of lower limited net asset. Don't forget adjustment, fair value adjustments can only happen in 2 ways in exam. It's either you revalue up or you revalue down. Fair value adjustments. Fair value. Let me open an adjustment account. Value adjustments is either we revalue up or we revalue down. If we revalue up, it's a revaluation. How do I know it's a surplus? The question will tell me fair value adjustments. It's either we revalue up that create a revaluation surplus, or down valuation deficit. These are the two. How do I know in exam is a surplus? The question in English form, the fair value is higher, more than, above, in exceed the carrying amount. If it is deficit, you say the fair value is lower, below, less than the carrying amount. Or you want me to compare myself by giving me carrying amount and today's value, fair value. If carry amount is 10 million, fair value is 15, there is a surplus of 5. But if it is 8 million, the day value is 8 million, we have in the book 10 million, a deficit of 2. This is what you do in exam. After you have detected is a surplus, what is the entry? P will be debited. Plus, I will go to the reserve, will be credited. Up deficit, PPE, credits, unnecessary reserves. This is it. Then depreciation that arises as a result of the surplus of the under depreciation we have been charging, we have been overcharging ourselves as a deficit. What do I do? In case there's a depreciation, PPE now will be credited. I will now go to the owner of the assets, which is subsidiary, retain any. Subsidiary will now be debited. Then for this, if there's a depreciation, what do I do? I will say PPE debit plus adjusted return also still. Well, let's pose this one. What does this say? It's at the date of acquisition limited net assets was equal to the carrying amount with the exception of item or plant, which had a fair value of 64 carrying amount in excess. I'll go to the question. BP debit plus 64. And the net assets, don't forget, between the acquisition, no retain any for the net assets. We'll go to the accounts and the subsidiary accounts. I will say shares, 28,000. Retain any, they will not give me because it's during the year acquisition. Then there's a revaluation surplus on PPE, which is what? 64. This will create a depreciation problem. I'll go and calculate the depreciation. Is either you give me depreciation or you give me the useful life as a date of acquisition. What did they say?
Useful life.
Yeah, the remaining life of 5 years as a date of acquisition. Using straight line division method, lower as not just good. I will now say for the depreciation aspect of it, 64,000 divided by the useful life of 5 years times from the date of acquisition to the date he asks us to consolidate. Don't forget we acquired on 1st April 2017 and we have to consolidate 30th September 2017. So from the date of acquisition, from 1st April 2017 to 30th September 2017, that is about 6 months, 6/12. So what is he going to give me?
$6,400.
What do you call it, sir?
6,400.
Thank you. What do I do to the 6,400? I will say PP credit minus 6,400. Or go to the adjusted. You are not charging your depreciation, correcting your retaining. I will debit, which is the subsidiary. Adjusted retaining also. Also, I'll just go to the question. PP minus 6,400. Then adjusted retaining of subsidiary. Go to the depreciation. 6,400. I will debit his account. As per SWFP, what was in the retaining of the parents? What was in the retaining?
208,000.
For subsidiary is 208. Thank you. And for the parents, let me fill in the gap. For the parent, we have what was in the retaining? 1, 1, 2, 2. Don't forget, you have not gotten to anywhere where we are still going. It's like just like last night's question. They say you should redraft. For me to redraft, I must know how to open. That's why we are doing all this. Immediately we get to investment in associate, I will throw a question of redraft. I will throw semi question, whereby they will just give us here, they say conclude the remaining. You will see that kind of question as we proceed. But for now, we are still on the basis. Immediately, I find out that, okay, the basis is understood very well. Then we proceed. Don't forget, we still have so many things to do. We are going to investment in associates, fellow subsidiary, foreign subsidiary, sub and this shape, consolidated cash flow, as like that. So I will say create one more time. I'll be talking to the management to let us create additional time, but they are contemplating about the pay. Because you must pass. Not only pass, you must pass well. The beauty of writing exam is to pass. Okay? That is done. I'll go to the next. No. So, sales of lower limited to in the post-acquisition period, we are 256. Okay, don't forget, you cannot sell to each other because you are a single entity. I say, picture to yourself, can you sell goods to your wife and make profit? Can your wife sell goods to you and make profit? No. According to the question, total sales. Immediately you hear this in exam, you see this. Total sales of goods. What will come to my head in exam? Unrealized profit on inventory, which you are familiar with because you must have done that in your FR. Probably that PM that you are battling with in FR has led you to forget some of the principles. Let's talk about the second adjustment in this question, which is unrealized profits on inventory. This is it. For me to say that there is unrealized profit on inventory, there must be elements of profits. That one of the parties has sold and he has made profit on it. Then secondly, there must be unsold at DOC. If there's elements of profit, but there's no unsold, what do you want me to do? He has realized it, he has sold it to third party. If there's unsold, but there's no element of profit, what do you want me to do? I ignore. How do I know there's element of profit now? There will be markup. Don't forget markup is on what? On cost. There will be margin. Then the last one is the one we apply formula. We said the formula one. That's all. These are the elements of profit you will see. Markup, margin, and Formula 1. Then the unsold. Good. Let's read the question so that you can understand better. Be with me. It's very simple.
Give me banana.
Jesus.
Well, I said, sales for lower limited oil in the post-action period was 256. So the total sales was 256 million. So you know we are reporting in thousands. Lower has make a markup of cost of 40% on this is. It has sold what he has sold. Let me remove the one he has sold. Let me see. Somebody wants to ask question. The one he has sold. And Kujide, please help us mute. You are disturbing others, please. He has sold 166.16400. That means the unsold out of the goods will not be. Then don't forget there is a markup of 40%. What is the unsold now?
89,600.
89,600. We'll now go to the question. Also, okay, 89,600 unrealized profit now on inventory. Don't forget if it is markup, it will be 40 over 100 plus 40 times unsold of 89,600. That is 40 over 140 times 89. Okay, 89,600. That's all. What does it give me?
25,600.
Yeah, 25,600. Now, listen to me, my brothers and sisters, my professional colleague. What will I do? The total intergroup sales will be eliminated. Why? Because we are giving POL. So what do I do? You cannot say to each other, revenue, I will debit 256,000. Then the cost of sales, I will credit 256. That's all. So let's post that first. Don't forget we have opened a cost of sales account. I'll go to my cost of sales. It's okay. In the cost of sales, this is it. Go to the question. What is the parent's cost of sales? I'll go and check. Parent cost of sales.
16,000.
Thank you. 2016.
2016, yeah.
Then the sub. Don't forget, the sub cost of sales should be prorated. You only acquire for 6 months. All income and expenses in the POL that related to subsidiary will be prorated by the numbers of months he acquired during the year, because it is during the year acquisition. So, cost of sales of say 102,1024,006 over 12. I will now say intergroup sales, which is 256,000. This is it. Don't forget, if you are crediting cost of sales, you are removing. Because cost of sales is an expense account, is a debit balance. But if I'm crediting it, I'm removing from it. Revenue is a credit balance, it's an income, profits. What I do, if I go to my revenue, I'll go to revenue account that I've opened. So
It's
okay,
five. That is 512,000.
where is that?
The adjustment, the subsidiary 6 months
Oh, thank
for
you.
the
I'm
sale.
coming. So what is the revenue of the parent? The revenue of the parent is 2,720,000 plus the subsidiary, which is going to be prorated 1,344,000 times 6/12 minus interval sales of 256,000.
Okay, make it easy.
Now, what you have said, sir, what you have said, say 512. Sir, do you say
Yes,
512?
sir. Yes, 512.
512.
Good. That is the first thing. Then the second thing, in the statement of financial position, I will not debit. This is for the P or L. In a statement of financial position, what do I do? Which is the consolidated SOFP? Who is the seller? I will ask the question, who is the seller? I will debit the seller account. Take the money from his retaining. This money is not realized. It's within the group. Then the consolidated inventory. I will credit. Also, of how much? Let's go and take 25,600. 25,600. So who is the seller? Let's see who is the seller.
The subsidiary.
Okay, sales of lower. So I'll go to the subsidiary account. Why do you sell and make profit from your parents? I'll go to his adjusted retaining, then debit. Also, okay. Why do you sell and make profit? Unrealized profit on inventory. I will remove the money. It's okay. UP unrealized profit on inventory. 25,600. Then I will now go to the consolidated inventory in the statement of financial position and credit it. It's okay. No inventory, but there's current assets minus 25,600. That's all. Any question for me? Any question for me? Any question for me? Next, any question? Good. The answers are no question. I'll go to the question again. All other than when indicated profit and losses are deemed to accrue evilly on time. Why did they give me that? It's on during the year acquisition. They accrued evilly. That means the profit comes into the company on an evil basis. 2468. This thing, this word is majorly, it's always written in this way when it is doing the acquisition. They used to say it a lot in doing the acquisition. Now, that is that. Then I'll go to general information for lower trade receivable, trade payable, reconciliation. How can it be tested in exam? In 3 ways it can be tested. Three ways: trade receivable and trade payable reconciliation. Trade receivable, trade payable reconciliation. Trade. trade receivable slash trade payable reconciliation between parents and subsidiaries. One, when they agree to owing, they agreed to the owing. Nothing in transit, both the parent and subsidiary, they agreed to the owing. That is one. What is now my own duty in exam? When they agree to owing, I will say trade receivable. Nothing in transit. I will credit. You cannot be sure that you are a single entity. Trade payable debit. This is the first one. The second one, total cash slash inventory in transit. This is the second one, total cash slash inventory. What can be inventory? What can be in transit, cash, and inventory. So I will say trade receivable can always show that credits. Then the cash that is in transit, I will debit. Then third one, parts in part of the cash or inventory in transit. This is a common one. Part of the cash or inventory in this transit. What do? I'll say trade receivable credits. The cash that is in transit slash inventory that is in transit, I will debit. Then trade payable debit. These are the three ways it can be tested. These are the three ways it can be tested in exam. Any question? Any question for me? Any question for me? In the absence of no question, let's see the one is given. Said lower limited receivable contest includes 9.2 million from Aya Limited. You are owing me 9.2 Aya, which did not agree with Aya Limited corresponding trade payable. This was due to a cash in transit of 6.4 million. Okay, so there's a cash in transit of 6.4. But don't forget, the same you are owing me 6.4. The third one, which of the one they give us? The third one, trade receivable. $19.2. But that one said no, it does not agree because there is a cash in transit of what? 6.4, 6,400. The difference now, we now go to the payable. 19.2 minus 6.4 or minus 19.2 plus 6.4. What does it give us?
Well, 800.
What do you say?
12,800.
Thank you. 12,800. That's all. I'll go and post the 12,800. In my book, 90,200 trade receivable. Trade receivable minus 19,200 plus the cash in transit, because there's no other, it's just current assets. Then my liability, that's all. That is all. That is all. Now, additional information 5, which is the last additional information, it said higher policy. Said is higher policy is to value SCR. Okay. No contributes as fair value. For this purpose, the fair value of the goodwill attributed to non-controlling interest in the one limited is 48 million. They've given me goodwill attributed to NCR. Anytime they give me goodwill attributed to NCR, I have 2 options. I have 2 options. The option 1 is to get the goodwill of the parent and add it. But how do I get the goodwill of the parent? Don't forget the goodwill of the parent is share proportionate even in fair value. And in summary, the goodwill of the parent is share proportionate. Then I can also get the fair value of NCR. What is fair value of NCR? The fair value of NCR is goodwill attributed to NCR plus NCR percentage on the net assets at the date of acquisition. That's all. But I cannot go to that because I do not know the net assets yet. Don't forget, they will not give me retain earning because it is during the year acquisition. Retain earning will not be given in 2 circumstances in exam. What are the 2 circumstances or the 2 situations whereby retain earning will not be given? No retain earning. 1, when it is during the year acquisition. That means acquisition. What is doing the acquisition? We acquire less than 12 months. Then the second one is at incorporation. At incorporation. When at incorporation is just start business, the retaining is what? 0. So how do I get the retaining at the date of acquisition? I have 2 options. It's either apply the formula method. It's either apply the formula method. What is the formula method? I will apply the formula method by saying, I will use formula now. By saying retain earning at the date of acquisition plus year ended, and the profits or loss equals to retain earning at SOF. What is the retain earning at the date of acquisition? I don't know. Is what I'm looking for. What was the retain earning at SOFP? 208,000. Year-ended profit or loss. I'll go to the subsidiary What is the profit or loss? 96,000.
96.
You can also make loss or say 96,000 times 6/12. So K plus 96,000 times 6/12 will give me 48,000, which is 208,000. I will collect the like time by saying K equals to 208,000 minus 48,000. Then K will equals to what? 208 minus 48.
160.
That will give me 160,000. Or alternatively, it's okay. Or what is the retail earning at SOFP? 208,000. I will now less the profit for the year. Profit for the year, which is 96,000. This will give me retail earning balance brought forward at the beginning of the year.
At start of the year.
When we start business at all, this is what is in our accounts. Was a retail earning balance brought forward now. 208 as at the beginning of the year. 208 minus 96,000.
112,000.
112,000. I will now add pre-acquisition profits. Unfortunately, this is 6 months. But always remember, if you are using this is pre, the other one is post. I will now say 96,000 times 6/12, which will give me 48,000. If I add it to it, it will still give me 160,000. This is what is your income pack. But I like the first method because it's made the job faster. Now I have gotten a return at the date of acquisition. So I can get the net asset at acquisition. Good. $160,000. I will now add everything together. 128 plus 160.
352.
We now have 352,000. That is the net asset at the date of acquisition. There's no more space. I need to send the working to the group. Okay, let me quickly do that. Let me save this and send to the platform. So with that, I can now calculate my goodwill now. I have options to calculate the goodwill. I have options to calculate the goodwill now. So that I get the goodwill of the parents. Good. And get the goodwill of the parents. And that's okay. Option 1. I'll get the goodwill of the parent. I say cost of investment 307,200. Add NCI. NCI to be added will now be 0.4 times 352,000. Net asset at the short proportionate. Goodwill of parents. SP. Zero point 0.4 times 352. What does it give us? 0.4 times 352. 0.4 times 352.
140, 800.
140, 800. 140, 800. This will give me the purchase consideration. So 140, 800 plus 307, 200. What does it give us? Then I will now less the net assets.
448,000. 448.
I will now less the net asset, which is 352. The date of acquisition. 352,000 to give me the goodwill. Which goodwill is this? Parent own.
Parents only.
That will give us
96.
96. But in exam, I can use the shorter method of the goodwill. Excuse me. I can use the shorter method of the goodwill, which is the cost of investment. 307, 200. Remove parent portion of the net asset. 0.6 times 352. 0.6 times 352. What does it give us?
211, 200.
200.
That will give me 211, 200. I remove 211, 200. That will give me the goodwill of the parents. Three 200 minus 211, 200.
96.
We will still give you the 96,000. Now, don't forget total goodwill to be reported, but its fair value. The total goodwill will now be parent goodwill.
That's 48.
Parent goodwill is 96,000. That of the NCI given in the question of 48. So the total of the two will give me the total goodwill. They will report it.
144.
Eh?
144.
140?
No, 144.
14. 144. One what?
Yes,
It's 144 now.
correct. It's correct like this.
144,000.
144. Yes.
Was 8 plus 6 is 14, then 1. That is it. Option 2. In the exam time, they give me goodwill attributed to NCR is an indicator, it is fair value. Yes, I'll just look for the good policy. When the good policy confirm it to me, I will now see for the option 2. I will now get NCI at fair value. Don't forget, NCI at fair value is the combination of goodwill attributed to NCI. Because when it is fair value, NCI is entitled to goodwill and it's also entitled to net asset. The goodwill attributed to NCI, which is 48,000, plus NCI percentage on net assets at the date of acquisition, which is 0.4 plus 352. 0.4 times 352 will give me 14800. That means 48,000 plus 14800. That's all. This will give me the fair value of NC.
188,800.
188,800. So this is what I will add to the cost of investment. I'll now go to the cost of investment, which is 307. Good. And that's okay. 188,800 plus 307 will give me the purchase consideration. How much
496.
196,000. I will now let 352. It will still give me 144. That is it. Any issue? Any issue before it becomes an issue? So the good need to be reported. Need to be reported. 144. Would be 144. That's all. Then I'll go and adjust return of subsidiary. What is the adjusted return so that I can bring it down? What does it give us? Yeah. Just return of subsidiary. What does it give us? Just return
176.
76,000.
176,000. We'll now take it to the post acquisition return earning. It's okay, share is 128. 176,000. Why this is 64, there's no value for them. 176,000 minus 160.
16,000.
So what is the net asset at DOC? Oh, NCR, the date of acquisition, which is 188,800. That is the good.
DOC is 68.
Huh?
368,000.
363.
68.
68,000. So I will not share profit now. Share profit, which is 0.4 times 16,000. 0.4 times 16,000.
6,400.
6,400. I will now add it to this.
195,200.
195,200. Or, because I understand very well, goodwill at SCI value at DOC will be the goodwill attributed to SCI, which is 48,000, plus SCI percentage of the net asset at DOC. I want to know the fair value of SCI at DOC, not our option. When I say SCI percentage on net assets at DOC, which is 0.4 times 368,000. 0.4 times 368,000. 0.4 times 368,000.
147,
147,
200.
147, 200. If I add it together, it will still give me 195, 200. If it is properly done. Because I understand that fair value of NCI at any date is the goodwill attributed to NCI plus NCI percentage on the net asset at any given date. So I've gotten my NCI value to be 195, 200. You can get the parent portion of the post. It's okay. I will not say share of profits, which is 0.6 times 16,000. No impairment, no anything. 0.6 times 16,000. What do we have? Zero point 6 times 16,000.
96.
What do you say?
9,600.
8,600. And 9.
1,142,400.
Huh?
The addition 1,142,500. Sorry, 400.
1,142.
400.
Like this.
Yes, sir.
1 million. 1,142. Okay, it was complete. 1,142,400. That's all. I will just add. I'm done with this. I'll just take it to my statement of financial. Immediately, my statement of financial position balance. The statement of profit or loss is walkover. So my NCI is 195. Then my retail earning is 1,142,400. The share capital will be 371,200. Okay. Let's add it. 96,000. 96,000 plus 128. What does it give us? 96,000 plus 128.
224,000.
24.
224. 224.
Then for the current liability,
400,000.
400,000. Then I'll go to my PPE. I'll go to my PPE. What is my total PPE now? Somebody should give us where the current assets.
1,760,000.
PPE is 1,760,000. Then the current assets,
684,800.
684,800. That's all. I will now add them together.
Total 258,800.
258,800. Let's go to the liability too. Yeah.
The same thing. 258,800.
Immediately I'm done with this. 5, 8, 200. I'll go to my POI. Don't forget, unrealized profit depreciation must be part of the cost of sales. Right. Just goes, okay. My cost of sales. Depreciation, if it is surplus, I will add. Then unrealized profit on inventory, 25,600. This is my total cost of sales.
2,304,000.
304,000. That will now go to the words. My POA. That's all. My POA. What is it? 304,000. Then my
And
revenue.
for revenue, 3,136,000.
136,000. So the gross profit
832,000.
1,000. So I'll go to distribution cost. What is the distribution cost of the parent? I'll check. Then that of the
64,000.
okay. That of the subsidiary. Distribution cost, parent 54,000 plus subsidiary. How
That's
much?
64,000 for parents. 64. For
64?
NCI too, 64.
No subsidiary.
So for
60.
subsidiary, 64.
Operate 64 times 6/2. That will give us 92. That's
96.
96,000. Then for the admin expenses, what is the admin expenses? 192,000 plus 102. Over
243,000.
243,000. Then the finance cost. What is the finance cost of the parents? 96,000 plus that of the subsidiary, 12,800 times 6/12.
16,000.
16,000. This will now give me profits before tax. What is the profit before tax?
477,000.
477. Then what is the tax of the parents? I'll go and check. The tax of the parents is 150. 100. Plus the sub.
$172,800.
172. Profit for the year.
304,200.
When I say profit attributed, so profit attributed to NCI parents. If it is during the year, just pick 304,200. Just pick the post. If it is during the year, 16,000 times 0.4. 16,000 times 0.4.
6,400.
6,400. Go for 200 minus 6,400.
Two nine seven 800.
7,800.
So that's the end of the question. That is the end of the question. That's the end of the question with this. Let's take another question. Let's take another question. Let's go to big bottle. Big bottle. One of the questions I just said to the platform is, I've increased it. Big bottle and small bottle. Let's take that. Big bottle. Small bottle. Send it to the platform. Go to the question. Big bottle, are you there? Have you seen the question? Have you seen the question? Big bottle Nigeria Limited. Let's quickly trust that. Big bottle Nigeria Limited. Have you seen the question?
Yes, sir.
What's the name of the question?
Big bottle, big bottle.
Okay.
Have you seen the question? Big bottle Nigeria. I sent it. Is it today? Yes. Big bottle Nigeria Limited. You there? Big Bottle Nigeria Limited. Big Bottle. Big Bottle Nigeria Limited.
It's
Hmm? Page what?
I can't find it too.
Can't find it.
And I was asking my got in there.
Ah, should I? Let me show you now. It's on the platform.
Yes, please. Yeah, one second.
This is one of the questions I sent today.
Big bottle.
Yes.
Great.
Question 3.
Yeah, I think. Let me check. If it's not there, we pick another question. I think it's there.
It's
Okay.
there now. Today material, question 3.
Yes, I've seen it. Question 3.
Is it question 3?
It's question
Yes,
3, yeah.
it's question 3.
Yes, big bottle. Big bottle and small bottle. Okay. On 1st of April 2018, Big Bottle Limited acquired the following investments. What is the requirement saying? The requirement is saying that prepare a consolidated statement of financial position as at 31st March 2020. With this, I will now open everything. So I should consolidate. I'll say consolidated. Statement of financial position as at 31st March 2020. No current assets. PP. PP. 37,300 plus 24,060 investments. Current investment is 52,600 plus 48. Then goodwill. Immediately after the goodwill, I go to the current assets. But I leave like 2 line space. There's see current assets. Inventories. Inventory of the parents 6350 plus 52. Then account receivable. Account receivable. Account receivable. 43 plus 1950. Then bank. One 390. Total assets. We'll go to equities and liability. Equities. Liabilities. Share capital. Retail M. And line space. CI. Non-current liability. Non-current liability. 12% deduction. Which is 82 plus 28. Deferred tax. Just 39 smooth or liabilities. The current liability, we have account payables. Payables, which is 5710 plus 1760 plus transaction. Five 330 plus 410 dividend. One 3 plus 1 bank for drafts. 0 plus 1 by 50. As well. This, for me to balance it in exam, I need the group structure. GS. Adjusted return of subsidiary. As per SOFP. I need to determine the net assets. I need to say determination of net assets. Net asset of subsidiary. Items. TOA. TOC. I need to calculate the goodwill. Don't forget, I know the formula. I'll write it down. Goodwill. Cost of investment. Add NCI. Purchase consideration. Net assets the date of acquisition. Goodwill. Good. I need to retain any of the parents. I need to retain any. Need to retain any. Need to retain of the parents. I need to calculate NCI. I need to calculate NCI. Date of acquisition. This is what I will put in exam. With this. After this is done, we'll now start reading the question and post. I've done this. The next thing is to read the question and the post. What is it? Oh yeah. Question says, on 1st April 2018, Big Bottle Limited acquired the following investments. The date of acquisition, 1st April 2018. When are we consolidating? He has given me date of acquisition. Date he acquired. 1st April 2018. When are we consolidating? We are consolidating 31st of March. 1st of March 2020. So we are picking account of how many years is this? This is 2
Yes.
years accounts. What happened? They acquire 1,320,000 equity shares in Small Bottle. Out of how many? I will go there. Total numbers of shares in subsidiary equals to values of the shares over nominal value. What is the values of shares? Let's check. 16,500. 16,500. What is the nominal value?
500.
The nominal value is 10.
10 naira.
So Naira cancel Naira. So it is 1650 at 10 Naira. These are 100%. How many does he acquire? He acquired 1320.
1320.
So don't forget to determine the group structure can be done in 2 ways. Is either they give me directly or through the numbers of shares acquired. So 1320 divided by 16 times 100. That's all. That will give me the group structure.
80%.
So the parent is 80%. I'll go to the question and fill it out. Great. Parents acquire 80%. Therefore, NCI will be 20% based on this question. We say parents 80%, NCI 20%. Good. That is it. I will proceed. When the return of Small Bottle we are 12,000 return at the date of acquisition. Or go and determine the net asset as acquisition. Don't forget net asset at 5. We say share capital. What is the shares? Which is 16 500. Then he has given me retain earning because he's not doing the acquisition. He's bound to give me the retain earning, which is 12,500. How much does he pay at a cost of 27,300? Has it been recorded? Yes. The question is silent. How do I know it is recorded? How do I know a cost of investment
Into
is
600.
recorded? How do I know a cost of investment has been recorded? How do I know a cost of investment has been recorded? 3 ways. Number 1 way, when the question is silent, it does not say anything other than say for so, that it is recorded. Secondly, when it is clearly stated in the question that it has been recorded. Then the third one, through investigation. These are the 3 ways I can know it has been recorded through investigation. If you look at this question, it just said the cost of investment 27,300, meaning it does not say anything other than that. It has been recorded. When it is recorded, what is my duty in exam? I will credit investments. That means pay cash payments of 27,300 recorded. What is my own duty when it is recorded? I will go to the question, cost of investments. I'll first of all remove the money because I want to calculate goodwill. I will say investments, credit, minus 27,300. Because if I'm crediting investment, I'm removing for it. Investment is an asset. They will now take it to goodwill calculation, cost of investment, debit. This is the accounting entry. When the question says or clearly says it has been recorded, or you investigate showing it has been recorded, or when the question is silent. So I'll go to the question. The cost of investment has been recorded. I will remove the money from the investment of the parent. It's okay. These investments, we say minus 27,300. That's all. I will take it to cost of investment for my goodwill calculation because it said it has been recorded. Where's my goodwill? I'll go to the cost of investment for goodwill calculation. What's the cost of investment? 27,000. That's all. Any question for me? Any question for me? It does not state there alone. It said 50% small bottle limited, 12% debenture at par, not at a premium or discount. He acquired 12% debenture, 50% of the 10% debenture. Don't forget, debenture is like a loan. You cannot give loan to each other. You are a single entity. You can't say you borrow your wife money. Your wife cannot say you borrow you money because you are a single entity. So the loan aspect of it must be eliminated. Say they acquire 50% of the debenture of the subsidiary small but so loan investments or credit. Then because the person that acquired the parent would record it as part of investment and the loan liability. Be debited. This is it. You eliminate. But how many percent? You say you acquire 50% of the debenture. How do I know the 50% of the debenture? What is the debenture of the subsidiary? There's nothing concerned is the parent that acquire 50% debenture in subsidiary. If you look at the question, 12% debenture. The parent, they've given me to be A2. Subsidiary is 2.8. So 2.8 and 0.5 equals to 1.4. So 1.4. So I'll go to the question. The question is okay. I kind of have open investments. Loan investments, I'll credit 1.4. See, minus 1.4. Then I'll go to the debenture, which is liability minus 1.4. That's it. Any issue? Please allow me to take water just a minute. Any issue? While you ask your question. Any issue? Just a minute while you ask your question. Okay.
There's something I'm missing here. For the goodwill calculation, I know that we've not finished it. We just noted something. For the cost of investment, we noted the value of the shares they purchased.
Robert, are you asking a question?
Yes, I'm just thinking aloud.
You're
For the purchase, yes, so the purchase consideration, we've recorded the 80% acquisition. Yeah, that debenture they also acquired.
Yes.
Is also a purchase consideration.
It's not.
That debenture.
No, it's not. It's a liability. If you borrow,
But it's a liability, but it's a cost to them.
Yes, look at it. It's a cost, but it's not recognized as part of the cost that IFRS give to calculate goodwill. One.
But they recorded it as investment.
Yes,
you've already recorded it in the.
For me to calculate goodwill, what are the costs associated cost of investments? In line with what? IFRS 3. IFRS 3 say you can pay cash consideration. You can use shares consideration. He has paid for the 80%. You also see that the parent is the subsidiary also have 12%. For they say this is interesting. Let me also acquire the pension. You can use what? Deferred consideration. Loan notes. Then the last one is contingents. These are the costs of investments we can make to acquire. What the parent does in this question, he acquires the venture to be collecting finance costs, interest. If you are preparing POL, I will see eliminate the 12% you are going to give. We see be eliminated in POL. One will record 12% of 1/4. One will record it as a liability, one will record it as an income, finance income to the parents. Why is it?
Like your life.
Sorry, my network just disappeared. Mr. Robert, are you with us?
We lost you.
Okay. But you have found me now.
Yes, we can.
Yeah.
We found you, yes.
Yeah, good. Oh, yeah. What he's saying is this. Apart from this cost of investments, the parent now see that this person is issuing the brochure to the public. Let me also purchase half of it, 50%. How much does he pay for the equity shares? He has said with 27,300. That is the shares he acquire. He also absorbed the loan. In short, you will see when it is acquired on premium. We are still coming there. You will pay premium to help the subsidiary. You acquire on premium. You also acquire at discount. Yes, it can be tested. You will see everything before you go to the exam. But it's a loan, it's a form of loan. He wants to collect 12%. On the share, he will share profits. You cannot give yourself loan, you are a single entity. It must be eliminated. Mr. Robert, is it clear?
Yeah, it's okay. It's okay. Thank you.
Any other question? Any other question, please, before we proceed? Any other question? After that is done, I'll move. Okay. So the fair value of small bottle limited asset at date of acquisition, as at the date of acquisition, was equal to the carrying value except an item of plant, which had a fair value of 1/6 in excess revaluation surplus. What do I do in exam? Very simple. My PP I will debit plus 1/6. I will credit the reserve. We'll go to the reserve of subsidiary. So revaluation surplus on plants or PPE as which is 1/6. Has it created a depreciation problem? Yes. Yes. Is either you give me depreciation or you give me the useful life of the assets. What did they say? The plant had a remaining life of 4 years. So I can calculate depreciation as at the date of acquisition. He had a remaining life of 4 years. So the depreciation will go in this way. Depreciation on the surplus. One-sixth is the surplus divided by useful life times from the date of acquisition to date of acquisition, which we have established in 2 years.
Yes.
This will give me 800. What do I do to the 800? Very simple. PPE will be credited. Adjusted return will be debited, minus 800. I will now go to the PPE. Depreciation. 800. I will be it. As per SOFP, what was the retail earning? 819. That's all. That's all. That is all. I'll go again. Next. On 15 March 2020, small bottles sold goods to big bottles for 700,000 on a credit term. Wow. Credit term. He has not paid money. Then trade receivable, trade payable will be eliminated. The goods has not been received by the company as of the 1st March. Oh, it has not been received. That means the total unsold is in transit. And we are not included in the closing inventory. No entry has been made in books of the Big Bottle Limited in respect of this transaction. Small Bottle Limited sell goods to our customer at a standard markup of 16.1%. Therefore, the goods is in transit. It becomes unsold as at the year end. He has not received. Don't forget, the other party will treat as if it has been received. Even before the goods left the company, they will have charged the markup. So, what is the total sales? 700. Unsold now, 700. Why? Because it is in transit. Inventory in transit. The 700 is in transit. So the 700 becomes unsold. Markup of 16. 16.1/3%. What do I do now? In exam, don't bother yourself. Neglect the 16, remove the 16, deal with 1/3. Just like when we do that 3.13%. Remove the 16. Deal with 1/3. Convert it. Don't forget 1/3 plus 1 markup times 700. That's all. Don't let it bother you. 1/3 plus 1 will give me 1/4 times 700. 1/4 times 700, that is your unrealized portion on the unsold inventory. What does it give us?
175.
Who is the seller? We ask. Who is the seller?
Please, 1 second. Maybe I'm making a mistake here. It's a markup. This is a small bottles markup, and this is a selling price. So are we not converting markup to margin to calculate on the 700 since the 700 is the selling price?
No. Immediately here, markup. 1/3. You have converted already. 1/3 markup. Are you getting what I'm saying?
Mm.
You will just add the 1. One over 3 plus 1. That's all. Times 700. If it is 25% markup, 25/125, all those things that you convert, no, it does not apply here. We assume it has been converted by doing that. So if
Okay.
you see find,
No, I'm saying okay.
if you see find a way to do it, you see get the same thing. So
Yeah, exactly.
175. What are we going to do to the 175? Who is the seller? I will debit seller's
To
account.
eliminate it.
Minus
Subsidiary is seller.
Then I'll credit consolidated inventory. Minus 175. That's all. As I have established, a subsidiary is the seller. I'll go to subsidiary accounts. This 175 is subsidiary accounts. Adjusted retail earnings of subsidiary 175 will disappear. Unrealized profit on inventory. Why do you sell to your parent and make profits of 175? I will now go to the consolidated inventory minus 175. Don't forget, irrespective of the seller, consolidated inventory must be credited. Next. Is the sales was on credit. 700 will receive removed from the treasury and trade payable. But if you go to additional information 3, it link it with 2. He said, as at 31st March 2022, the account payable of Big Bottle Limited include 750 Big Bottle. Big Bottle is the parent. Due to Small Bottle Limited, before taking into account the above transaction, before taking what is in the Big Bottle trade payable is 750. He has not received the goods sent by Small Bottle to the parents of 700. So in the book of the Small Bottle, is total receivable that will be collected from the parents, the Big Bottle. Total receivable now, look at it, what it's saying.
Yeah.
The trade receivable. The one is owing before of what? 750. Plus the one he just sent now, 700.
Yeah.
150, 450. This is what he's saying. In the record of the Small Bottle, the seller, he has issued goods of 700 out, but it has not been received by the parent. So in the record of the parent, he has 750 because the good has not entered. It's still in transit. It's a trap. Adibe, he did not say this. He did not link it. Nothing more. I will have removed the 700.
Yes.
Because you cannot sell your credit to each other. So, what will now be the accounting entry, my brothers and sisters? Very soon. I will now say the total trade receivable. Credit minus 1,450. Inventory that is in transit. I will debit plus what? 700. The balance now. I will now have trade payable. Debit. Ask me a question. Is it clear? Ask me a question. Ask me a question. Mr. Robert, is it clear?
Yeah, it is. It's fine.
Every other student in the class. Elvis, is it clear, my brother? I've not heard you saying anything today.
Sir, it's clear, sir.
Okay, good. That's what we are saying. So I'll go to the trade receivable. It is my sister that used to disturb me before. He has started disturbing me again. Trade receivable. In the current asset, where is it? Minus 1,750. inventory that is in transit. I will now go to the trade payable. Remove the 750. That's all. That is all. Yes. B bottle did not account for dividend receivable. He has not accounted for dividend, my brothers and sisters. Anything you see dividend, post-acquisition dividend in the question, you have to ask the question, these three things. 3 ways it can be tested. The first one, proposed dividend. So how they call proposed dividend? Or dividend declared. One, when the proposed dividend is only mentioned in additional information, AI, not artificial intelligence, additional information, but no provision is made in the financial statements, FS. My brothers and sisters, ignore. Japa
They're just blowing grammar.
at all. Yes. If somebody told you, Mr. Ravi, that I'm going to marry this year, say, oh, that's a good idea. Said, have you got an apartment? Say, no. God will do it. What God cannot do does not exist. He said, have you made provision, money for the ceremony, marriage ceremony? Say no. He's trusting God for wonder. You also ask, have you found a lady that have accepted your proposal already? Say no. What do you think that person is doing? He's just playing. They play. They will just mention it's additional information. 2, when proposed dividend has not been accounted for, but provision has been made in the financial statements. They've made provision in the financial statements. When proposal has not been accounted for, but you go to the financial statement, just like this question, you see dividend. They've made provision. Just like the initial example like it. Say, oh, you said you want to marry. Have you got to say, yes, I've bought in 6-bedroom apartment in VI. Say, what about the marriage ceremony? Say, because of economic condition, I've said about 35 million down for the marriage ceremony. Then he said, have you found a lady? Say, no. Why will say that? I have a sister that is about to marry. Let me connect you together. Because you are seeing that the person is husband material, is ready for marriage. I will just introduce my sister to the person. So what do you do in this regard? Go to the financial statement. He has made provision. I will not take parent portion. Take parent portion of proposed dividend in the subsidiary. There is nothing concerned with the parent proposed dividend, is the subsidiary. What the proposed dividend of the subsidiary? Let's see.
200.
How much? 1,000.
1,200.
Parent portion will now be 0.8 times 1.2. That will give us 960. What do I do to the 960? I'll still retain any of the parents. Of parents. Credit plus 960. Then the proposed dividend. Of debit. This is the second one. The third one, which is the last one. The proposed dividend has been accounted for by both parties. The proposed dividend, they've recorded it. Has been accounted for by parents and subsidiary. I will take the parent portion, then trade receivable slash dividend receivable accounts. Credit, but we eliminate. You cannot collect dividend as a collection of profits. The unassessed trade payable slash dividend payable. Debit. That's all. Anytime you see, ask yourself, these are the three ways can be tested. Proposed dividend. Which one does the question give us? The second one. It said he has not been accounted for. So the 96,960. I'll go to the parent account. You retain any of the parents. 960. Retain any of the parents. As per SOFP. What is the retain any of the parents? 34,560. I will not see. I will go to the debits. Next. Next.
Goodwill impairments.
Goodwill arising on acquisition of Small Bottle Limited was considered to be impaired by 20%. So I've not known the goodwill. But don't forget the treatment of impairments depends on the valuation of SCR. How we treat impairments depends on the valuation. Treatment of impairment depends on the valuation of NCI. Don't forget this. If NCI is valued at fair value, know that this goodwill belongs to both the parents and NCI. And if it is share proportionate, the goodwill belongs to parents only. And if there is impairment, he will suffer it alone. So he has not told me how they value NCI. If the question is silent, that is share proportionate. Additional information 6. The fair value attributed to non-controlling interest, not fair value of the goodwill attributed, is the fair value of NCI. To be 6.8. So what do I do? Add NCI 6.8. 27,300 plus 6.8. What does it give us?
3,400.
What is it?
3,400.
3,400. I will now less the net asset at the date of action. No more story. I'm done. This is the net asset. 16,500 plus 12,500 plus 1,600.
3,600.
Eh?
3,600.
3,600. So the 3,600 will be removed. 3,600. This will not give me goodwill. Now I know my goodwill. 34,100 minus 3,600.
3,500.
3,500. Don't forget the impairment is still 20%. So it's 0.2 times 3,500. How much is it giving me?
700.
700 is the impairment. Then the goodwill at DOC. What is the goodwill at DOC?
2,800.
That's all. This is fair value. The impairment will be suffered between the parent and NCI based on their growth structure. Parent will collect impairments. $0.8 times 700. Then
560.
560.
560 will disappear. Then NCI at the date of they've given us to be 6.8. Then the impairment.
140.
140. Good. I'll debit the reserve. Next. No more. I can now. 8190 minus 800 minus 175.
7215.
7215. Confirm the figure. He used to give wrong figure.
So it's
And-
confirmed.
Good. Confirm the
Confirm the confirmer.
Need to confirm the confirm. So the share capital, they did not revalue further. I will go to the question. 7215. 7215. Don't forget, it is DOC minus DOE. 7215 minus 12,500. What does it give us?
Minus 5285.
5285.
Minus
5285.
5285. That's all. It's not profit now. That's a share of loss. You make loss. Parent to collect 80% of the loss. Share of loss. 0.8 times 8. 8 what? Is it
5285.
5285? So 5285. That is the end of the question. NCI will share of loss 0.2. 0.2 times 5285. That's all. Is 0.8 times 5285.
4228.
1228 loss. Then this one called
1057.
1057. So with this, I can now consolidate. Yes. Give us figure.
NCI 5603.
5603. Good. Let's go to the retail end. 34 plus 0 plus 960 minus 460 minus 4228. This will give me 30,732. Compose 5603. Go to the question. What is the share capital of the parents?
Three 43,000.
14,000?
43,000.
43,000. Thank you. The NCI figure we calculate is now is what?
5603.
5603. Thank you, my sister. Let me give you bonus question for you and solution. 5603. Then the venture. Three 9 plus 1 to this one will give us 5-1. Yes. 5-1. Yeah. 12% debenture. 82 plus 14. 96. Then for the payable, we have 7710 5710 plus 1760 plus or minus 750. 6720. Five.
No, okay.
Is it not?
It's correct.
I withdraw my
Confirm
bonus.
the conformer.
I withdraw my bonus.
Confirm the conformer.
Confirm the conformer. Yeah. 1 3 plus 1 2 minus 960. This will give me 1540 and 1950. I'll go to the PPE and coding. The good deal is 28, Abby. 35 and 7, yes.
Yes.
37,300 plus 24,060 plus 16 minus 800. 62,160. Is that not?
Yes, sir.
It's correct.
Investments 52,600 plus 4 plus 48 minus 27,300 minus 14.
28,700.
Thank you. Then inventory 6350 plus 52 minus 175 plus 700. Then account payable 4360 plus 1950
Or 560.
plus 17. 4560.
Yes, sir.
Then this will give me 1390.
390.
Somebody with good calculator should help us. Can you see this? For me? Total assets. Somebody should help us calculate. Then we throw down for the equity and liability.
Total asset, I got 111,685.
Confirm the confirmer. Six two 160 plus 2,700 plus 28.
111685. It's confirmed.
Is that what you got?
Yes, sir. Confirm.
Yes.
One 11685. Let's go to these two.
I got 111985 for liability and equity.
You got 985.
111985.
Yes.
111985.
Something
Somebody
is
Yes, sir.
has
missing.
given us one figure. Let's
300 is missing.
Where is the 300 coming from? 28,700. Our PPE is 62. Please confirm the PPE. Then account receivable. Let's see. Let's have it. Let's have it. 4360 plus
The PP is 62,360.
62. 4360 plus 950.
45.
Is that 1/8 minus 800? If so, yeah.
16.
Okay, 1/6. Okay, it's correct then.
Now look
Is the
at the
account
receivable. The receivable. This is 1950, no 1750. I think that is the problem. Let's see.
Correct, sir. It's correct, sir.
the account
This is
receivable 300 naira?
1950. Let's see.
Account
Let's have it.
receivable. It's supposed to be 4,000 not 4,000.
Good. The person that called the figure, he say confirm the confirmer. And the confirmer,
Confirm the rubbish.
he confirmed rubbish.
Wait, it's correct now. Is it
What
not
is
It's
correct?
43?
correct now.
Correct
4560.
now.
It's correct.
The confirmer is correct. Oh.
Huh?
It's correct.
Let's see. Let's see.
4560.
No.
Yes, now. Yes.
What is the I'm calling 4360 plus
Sir, it
Mhm.
is 1,450. The minus it is 4,360 plus 1,950 minus 1,450, not 1,700.
Oh,
So
1,450. Three
yeah,
receivable is how
now
much?
it's supposed to be
700
1,000
plus.
plus 750.
Okay, that's true. It's 1,450. So the confirmer is also correct. 700 plus 750 is 1,450. I think that's what it is. 1,450. 700 plus 750. Okay, that's true. What does it now give us now?
4,680.
Okay, now.
4,860. 4,860.
Confirm the confirmer, sir.
We don't need to confirm the confirmer again. We all confirm it. So what is the figure we have now? What is the figure we have? Do we see it?
111,985.
111,985.
111,985.
Then the same goes to you. 111,985. So let's go to Dream League and Super League, which is the next question. Question 4. Super League PSC and the Dream League PSC. Question 4.
Are we having a vigil tonight?
By my time here is 15 minutes after 10. So
What tomorrow?
This is
Now,
past 11. This is past 11.
you are working from home now. Working from home.
Farmer.
Is that public holiday tomorrow?
You say Super League.
Yes.
Okay,
The
so
next
this is your
question.
assignment. This is your assignment, huh?
We should run and do it now.
We can just go through the additional information, then we'll do that assignment.
Assignment, as Mr. Robert has said, assignment to be submitted
No.
before next meeting. Super League and Dream League.
This
Let me
Super
give
League
you another-
has so many children and grandchildren.
Let me give another on doing the year acquisition. Also do Pep and more. Pep and more doing the acquisition. 2 assignments.
That's question what?
I'm coming. I don't know the question. Pep and more. Somebody should help us look for the Pep and more. 2 assignments.
That's question 5.
I hope it's not the solution is not on the platform.
Which question is it now?
Pep and more, question 5. Under doing the year acquisition.
That's the last question.
Pep and more.
Question 5 is digging deep.
No, doing the year acquisition. Go to last question. Or you want to try digging deep? Have you done
No.
IAS 19?
I'm saying that after the Super League, the second one you are giving us, I've not seen it deep because the question 5 here is digging deep. That's why I'm asking.
No, you see, go
Last
from
question.
the
Go to
last
the last
question
question. Scroll down.
is there. The last question. Digging deep. We are going to solve it in this class. After you have done IAS 19.
The question 5, Pep.
Yes, Pep and more. Pep and more. Pep and more.
IS 19 is employee benefits now.
Yes, have you done IAS 19?
We have
Yes,
done
ma'am.
it. We've done it.
Done
We've done
it.
it. We've done it.
I've done it.
Okay.
Employee benefits.
So next week we can take that question there. Digging deep.
All right, sir.